You gotta be flipping my flapjacks. Billionaires are coming out of hiding left and right now. Oh my goodness, it seems like last several days I've been able to react to billionaire after billionaire after billionaire. They're all coming out of hiding. Billionaire Ron Baron, who was definitely an early investor, a relatively early investor in Tesla and made a ton of money off that, and actually has a very impressive long-term track record. He's going to talk a bit about the markets here. If I had more money to invest, I would invest it. I want to hear what he has to say about that and the points he's going to make. Then I want to listen to billionaire Sam Zell and react to this one, give my opinion on we will likely have a recession and kind of give my opinion on what he's talking about there. And I thought the perfect video to end this with here today is this one, which is we are very optimistic about economic growth over the long term. And here Ron Baron kind of talk about some things in regards to Elon Musk and how Elon Musk looks at investing, how Warren Buffett looks at investing, and these sorts of things. And I think that's a good video to end it on today, because we're in definitely a market moment, right, where it's very, very easy to get focused on the short term with everything going on, right? And yeah, so I thought that was a good video to react to here at the end. I appreciate everybody for joining me. As always, 18,000, and I think we're at 18,400 subscribers now at this point. So I appreciate each and every one of you that subscribe to the channel. Thank you so much for being here. As always, I appreciate all you guys. Also, if you're looking to join my private stock group and get access to everything in there, including exclusive videos, I produce sometimes several exclusive videos a week inside the private stock group. You also get access to all our different Discord chats for all our different stocks out there, and you also get access to all my different course curriculum. So if you would like access to that, check out the pinned comment down there, and you can go ahead and fill out an application to join us inside the private stock group, and I'll see you in there. Alrighty guys, let's jump into this.
My friend, and he's the head of Hyatt Corporation. And he says to me a few weeks ago, he says, you know, Ron, I've been trying to figure out for a long time how you do this. How does this happen? And how do you pick stocks? And then he says, I figured it out. What you do is you try to find people who you really like, who you really admire, who you think are great leaders, you like integrity, you can trust them, and then you invest in it, and then you find out a way to invest with them. If you like the person, you figure out some way to invest with them. That's what you do. And I think about that, and that is what we do. We try to find, and it goes back to when I was a kid, and I watched the people who were most successful in Asbury Park. And one guy owned the rides on the boardwalk. You know, and it was a platform, so people go to the boardwalk and they buy the rides, or they play the Kooky Dolls, or they had the Umbrella franchise, or or the Suntan franchise when I was selling on the beach when I'm a lifeguard. So I see these things, and my whole life it's the people who. My grandfather, we started off as a construction worker, then he was a peddler, then he owned a candy store. He didn't sell the candy store when things weren't going well. He just figured out, I'll put more pink balls in there so that they can bounce the penny on the street. So it's about just being long-term about everything. And the people who've done the best that I've watched have done, just invested for the long term in businesses, and that takes you through the inflation. Oh, one more thing. About a week ago, there was an article in the New York Times over the weekend interviewing 6 or 7 money managers about what they thought. And everyone said, well, we have to wait till inflation peaks and we have to wait till interest rates start going down, except for one guy. That was Lloyd Blankfein. And he says that we're going to get through this. He says in 1963, we were stopping the Cuban Missile Crisis. We were stopping Russian...
By the way, I think this is very, very important because I would say, unless you're very well experienced in the market, you probably don't even know who Lloyd Blankfein is. And shout out to the people that do. You're on top of your game. But he's a former CEO of Goldman Sachs. He just stepped down a couple of years ago. But he did a phenomenal job running Goldman Sachs in his time, including in some turbulent times. Let's call it that.
In mid-ocean. And they were putting missiles in Cuba. We got through that. They had National Guards shooting kids on campuses. We got through that. So we've had periodically, we had assassinations of political leaders. We got through that. So there's all these things that happen all the time. On the other hand, in entropy, it's this, chaos. Whenever we've had it before, we've come through, and the stock market is 800, as we talked before, in 1982. It's now 32,000, 40 times.
Are you putting more money to work right now because you can find more opportunities because prices have come down? Or is this a situation where you literally just keep your head down and it's business as usual?
In last November.
It's a beautiful light. I just had to compliment that. I mean, just a beautiful backdrop they have here.
The end of October, you couldn't find things that were expensive, that were cheap.
They were cheap.
Now you can't find things that are expensive. You can't find anything that's expensive. And so if I had more money to invest, I would...
In all due respect, Mr. Ron Baron, look at the Dow 30 stocks, and you will still be able to find expensive NASDAQ stocks. It is very hard to find expensive out there, and a lot of S&P stocks, but I'm telling you, Dow 30, we got expensive everywhere.
I'm invested.
You're fully invested.
Yeah. And, we get more money, but and in chunks. And so as soon as we get it, we invest it. But, I find things everywhere. Wow. And that doesn't mean this is the bottom. It just means this is a great time to invest. When you're talking today, you're going to hear Hyatt and Vail. And those are companies in which we invest. And these are companies that are selling, they have, they buy in their stock. They have a couple of percent yield. They shrink their capitalization 7 or 8% a year. They're selling at 11 or 12 times. There are benefits from inflation. In the 1970s, when I was investing at the beginning and there was a lot of inflation at that period of time, I couldn't understand. The stock market kept going down. I couldn't understand it. I said, these businesses in which I'm investing, what they own keeps getting more valuable, and every day the stocks go down. Why is that? And of course it ended. But in the 1970s, even though the stock market was going down, the businesses in which we're investing, so I'm a stockbroker, I'm selling research that I'm doing to hedge funds and mutual funds. And in the 1970s, the ideas that I'm selling, they're making money because the companies that we're investing in, they kept growing through it all. It was Disney and McDonald's and Federal Express and Nike and Mattel and Hyatt. So they kept growing, and Tropicana. And so my clients, I wouldn't have been able to make a living if I was just being a long-term investor in the 1970s. I needed commissions. And so I would get people to buy one stock, and then they'd double or triple, and then they would sell it, and then to buy my next idea. So sell Nike, to buy Hyatt, And what would happen is that I look back after 10 years or 15 years, I said, man, I'm a disaster. Look at all those companies that I recommended selling, and look what happened. I could have been rich. They were up, I recommended they doubled or tripled or, and they're up 30 times, 20 times, 50 times. So that's what happened. That's how I became a long-term investor.
So that was phenomenal, right? And that shows you how broken the broker system was back then, in terms of trying to get your clients to then sell out of this stock and then move the money in that stock. It's just a broken system. The other thing I thought he was, really important to mention there is he was mentioning, switching from this stock to that stock. And basically, what I've learned in the market, certainly over time, is you've got to let the winners run. And sometimes it's multi-years, and people are very quick. And even myself in the past, very quick to take a profit, right? And you make 20, 30% on a stock, and then it's like, I got to sell out. And then sometimes you got to go back to, why am I in this stock? Like, didn't I get in the stock because I believed it could double, triple, quadruple up? Why am I going to run out of it when it went up its first 20% or something like that, right? And that's just a lesson I think we all have to learn in the market over time. And for a lot of you guys, obviously you're getting to pick up stocks very cheap now at this point in time and might be able to continue to for the next, let's say, 6 to 9 months, right? Because even if the stock market starts to come back, there's still going to be countless stocks that are ridiculously cheap for the next probably year, to be honest, whether the stock market goes up or down. And so you're going to be in an environment where you're picking up these stocks, buying them. All I can tell you is don't be so quick to run out of them. When they start going up and you start making some real money, don't be so quick to be like cashing. That's because you'll find out, a few years later, you're going to look back and be like, oh, I sold that stock after its first 20% gain and went up 200%. What the heck was I doing? And I've done it so many times, it's ridiculous. And it's a lesson you have to learn in the market, right? And the other thing I thought was interesting is he's talking about the 1970s, and he was talking about, why a lot of stocks were going down, and he was trying to figure it out and these sorts of things, right? And Peter Lynch talked about that same thing in the past, and that was just a very funny time, kind of like we have going on right now, where it just sent whole stocks down, and people are like, my gosh, man, is there any place to make money in this dang market? All right, billionaire Sam Zell. Let's listen to what he has to say, and I want to react to this one.
Number of business leaders who have been very concerned about the Fed's rate hikes, the level we're getting to, saying that it's already having a big impact on business and potentially putting us in a recession if we're not already in one. What's your take on this? Because I know as recently as July, you were still thinking the Fed had some room to run.
Yeah, I think the Fed is doing all the right things now, reflective of the fact that the Fed didn't do all the right things earlier this year. The concept of transitory inflation is pretty awful, and I've never heard that phrase before, and I'm sure they'll never use it again. But, we overflooded the society with capital. We debased, a fiat currency. What was it, $8 trillion that we did in 3 years? I mean, we used to do, stuff in Congress was $1 billion, and that was a big deal. $1 trillion? And how could you not expect that to create inflation? And not only a minor inflation, but, 10% inflation is a serious scenario. And I'm not even sure that that's really reflective of how much inflation is really existing.
So if the Fed's doing the right thing right now, you would encourage them to keep this up? What Jay Powell said yesterday was right. And that means what in terms of the pain that the economy is going to feel?
Well, I think that the likelihood is that we're going to have a recession. Frankly, that's what happens when you flood the world with money and everything is free. You lead to excess, and excess ultimately leads to a recession.
Can the Fed do it by themselves by trying to do this? Because other central banks, not the Bank of England, which just did 75 basis points in the last few minutes, but other central banks like the European Central Bank have kind of indicated that they're going to pivot a little bit because of how bad the recession there is anticipated. And I just wonder the resolve that you're going to have in the Federal Reserve and other places if the global recession really starts to pinch.
Ooh, pivot talk. This is what I like to hear. Okay, let's see what Sam Zell has to say about a pivot. The way I'll put it in terms of kind of what the Fed did, what the government did in general, right? Because it was from both sides and both work together. Both are basically the same thing at the end of the day. It's similar to, like, let's say you were tired, but instead of going to sleep, you make YouTube videos. No, I'm just kidding. Instead of going to sleep, right, you just drink an energy drink and you drink a 5-hour energy. At some point in time, that's not healthy, right? And you need to actually sleep. And so with the economy, we couldn't come to grips with the fact that there was going to be a lot of economic destruction. And we didn't want to come to grips with that. So we printed our way out of it, for lack of a better term, right? And we flooded the market with liquidity. The Fed did, obviously, the government with stimulus programs and all those sorts of things. And, we'll pay your rent and we'll pay your house if we got to. And the mortgage moratorium and all the money that was sent to businesses and whatnot. Some people with some businesses got millions of dollars. By doing all that, it was basically the government trying to say, we want the economy to be healthy, but even though it can't be healthy right now, because it shouldn't have been healthy, because they shut everything down. So we should have felt a lot more pain, but basically they said it's not okay, we feel that pain. So like I use with my, instead of going to sleep analogy, you just keep drinking energy drinks and coffee and espresso and, staying up. And it's like eventually it's going to catch up to you, right? And eventually it caught up to us, obviously. And now we've been paying the price for the past year. Everybody knows that, right? It's a very painful price to pay. There's no doubt about that. But it is what it is. So we kind of went sleepy now.
Well, I don't think that there's ever been much of a case for unified action worldwide. And the attempts to do so have not been very successful. We have a particular situation here. I mean, during the pandemic, the U.S. was far and away the leader in relaxing covenants and making money free. And that means that on the other side of that same coin, I think the Fed has to be very resilient to bring this inflation back to normal.
I guess I wonder what you're doing with your investments at this point. If that's the case, then stock market probably has further to fall. Interest rates maybe move higher from here? What do you do as a result?
I think interest rates are going to move higher from here. I think that, a lot of the discussion about interest rates have talked in terms of absolutes, when in fact I think relatives are more important than absolutes. So, taking the cost of capital from 2 to 0, in my opinion, accomplished very little. Taking interest rates from 0 to 2 accomplished very little. And it's only now that we're in the 3s and 4s and on our way to the 5s, that we're seeing some impact. But it's still
very important. Did you hear what he just said there? He said we're on our way to the 5s. So it sounds like a gentleman that's very confident that we're going to be in the 5s probably within the next 6 months. He didn't say, obviously, that time frame, but just kind of reading through. I've heard Sam Zell talk a lot over the years, and so if I had to make a prediction, I think he believes we're probably going to be in the 5s within 6 months.
Early, and I wouldn't get, I don't think there's any basis for being overly optimistic that this will be done very quickly or without pain. I mean, if you go back to end of World War II to today, we've had a series of recessions. We've never had a recession without a liquidity crisis. And if I were guessing, I would think that a liquidity crisis is the next item on the agenda.
Are you hoarding cash then?
I'm sorry?
Are you hoarding cash then?
Well, I guess I've been hoarding cash for some time. And at first I said, gee, holding a lot of cash in an inflationary environment, maybe not so smooth. But the more I looked at the situation, the more I was convinced that, liquidity is value. And there's definitely a liquidity issue that's arising. I mean, at Equity Residential, we just finished redoing our revolver. Now we're an A- company and a behemoth, $40 billion company and very low leveraged. And getting that revolver done was a challenge. It was hard.
Whoa, okay. Whoa, that was big. That's why sometimes these clips are good. I'm telling you, man, sometimes these are valuable, to just kind of go through some of these clips and listen to them, because you get some very valuable information from some of these gentlemen sometimes. And Sam Zell just gave us he says it was a challenge for his $40 billion A- or, great capitalized company there to get a revolver done. I think that's very telling about the capital market right now and how tight financing really is right now. The fact that he says that was a challenge. I mean, that's big, man. I think that's the type of stuff, is very, very valuable.
Finished redoing our revolver. Now we're an A- company and a behemoth, $40 billion company and very low leveraged. And getting that revolver done was a challenge. It was hard.
It was a challenge. It was hard. I think that's very big because, you go back a year ago, 2 years ago, it was like, it didn't matter what you were, you could get money out there. It wasn't a challenge at all, right? Never mind if you were in a great capital position. So what a change. What a change. In 1 year. That's an incredible thing. It's not like it took 10 years to get there. 1 year. Just an incredible change. Okay, next video up here, billionaire investor Ron Baron. We are very optimistic about economic growth over the long term. Let's hear what he has to say about Elon Musk, Warren Buffett, and others.
Morning, half an hour from now, we'll get that jobs report. And it strikes me that you have a pretty good idea about what's happening in the economy. Even though you're a long-term investor, you step back from all of these things. You invest in so many companies, you have to have a good expectation of what to anticipate in the economy over the next 12 months or so. What are you thinking?
I think there's no question that the economy is slowing. Companies are laying off, not hiring. For our business, we're steady as we go. We just keep growing. So we just increased our office space. We had 49 and 48th floor. We've just added the 47th floor, building it out right now. We've never in the history of our firm had a layoff, not one. And so last year was the only year we ever were down in number of employees. We went from 168 to 170 or 169 to 168, one person. We had 8 or 10 open positions, couldn't hire them. This year we've gone from 167 to 185. So more space, more offices, more people. And so and long term, very, very optimistic about, I think economy growth is going to accelerate over the future. And I think that, so I buy into Elon Musk's idea about investing. He said that to be successful, you have to be optimistic and you have to have a long-term perspective and you have to, so you can't be thinking about the next quarter. And just the best time, Buffett says it, is the best holding period is infinity. Holding forever as long as you can. So, I would make one other point, and that is that if you were prescient enough to sell at the exact top of the market and buy back at the exact bottom of the market, it was down 30% or so. That's how much you need to break even for paying taxes and everything. So if you're if you're able to sell your whole position and buy back your whole position, which of course you can't. So since you can't do this anyway, then all I do is just keep investing in these businesses that we think are going to get to be much larger and grow much faster than the economy and protect ourselves against inflation. Simple.
Are you a fan of what the Fed's doing right now? Do you worry that they're going to put us into a deeper recession, or are you more worried about inflation and getting out of control?
Every time there's a pandemic, there's a war, there's a financial crisis, every single time after that, there's inflation. And the reason for it is that in order to get out of those problems, you print money. And so when everyone says that they were behind the curve or they didn't do, this is a plan. It's planned to devalue your money, and the reason they devalue your money is because that's how they pay off the debt that was incurred in order to get out of the problem. So it's always the same thing. It's always this inflation that takes place after we spend all this money to get us out of the problem. We understood that in the 1930s we had this depression and we couldn't get out of it. And the only way you got out of it was during World War II. That's how you escaped it. So now we've learned that if you print money, you spend money, okay, so it makes your money worth less, you devalue your currency, but long term, that's a good thing because you create jobs and you create, so that's what you do. And that's going to end. So I think the Fed's doing the right thing.
We had Sam Zell on yesterday. He agreed. He thinks the Fed is doing the right thing at this point, even though he thinks they started too late. But he said one thing that was pretty concerning, just that the next step is probably going to be a liquidity crunch. That's similar to what we've heard from people like Jamie Dimon, from Ray Dalio, from Paul...
Did he say liquidity crunch or did he say liquidity crisis? Because liquidity crunch sounds less aggressive. We'd have to rewind the video. I'm pretty sure he said liquidity crisis.
Jones, if you're fully invested right now, what happens if there is a liquidity crunch, and do you worry about something like that in the markets?
So we have flows, and there are people who are interested in investing with us large sums of money, and if they have opportunities, then they'll get better prices. And if markets go down, then I'll lose money for a while. But long term, as we talked about before, the Dow Jones was 800 when I started. It's now 32,000, 40 times. And I think growth is going to be faster in the next...
No, he's obviously up there in age, but I mean, geez, 800 Dow Jones. My gosh, that's crazy to think. 20
or 30 or 40 years than it has been for the last 20 or 30 or 40 years. And all the growth in the whole world has taken place in 200 years. So here for 1,800 years, from the birth of Christ until 1800 to the Industrial Revolution, there was a quadrupling in number of people and the size of the economy. So it means you doubled your money in 900 years. So think about this. You're a stockbroker, a money changer, and you're trying to get clients and say, listen, Becky, I think I could double your money in 900 years. That's the way it was. Now, the last 200 years, the economy is up 100 times. 200 years, 220 years. Then it was up 4 times in 1,800 years. That growth is accelerating. It's accelerating the past 50 years before that. So I'm thinking growth is going to be faster going forward than it has been before. All this new technology you're getting for healthcare and technology, growth is going to be better. Our life standards is going to be higher. And this is an amazing time to be alive. I just want to try to stay alive as long as I can.
But is that a concern?
I like that. I mean, I'll let him finish here, but that's just great. I got something to add to that.
About a liquidity crunch, do you think that's potentially the next step for the market?
If you're Jamie Dimon, you know a lot more about this than I do. And when there's a liquidity crunch, then the government prints money to get out of it.
Yep.
I think that there's...
What if they can't this time because of the inflationary picture?
They always can. They always figure out things. There's always problems that they have to face, and they always resolve them some way. It's a lot of power. True. Governments have a lot of power.
It's true. I mean, it's not like there's ever been a situation where like, can't figure out this one. No, we always figure it out, right? And short-term pain's there, obviously, but we always figure it out. Always. And I think that's very important to remember. I think he just brings up some great points about focusing on long-term, zooming out. I think sometimes is really, really valuable, right? When he says things like, when he started the market, the Dow was 800 and it's 30-something thousand now, right? I mean, in our lifetimes, it's very possible the Dow could be 500,000. You know, the NASDAQ could be, I don't know, 100,000 or 200,000 or 300,000. And I know those numbers are hard to even fathom, but it'll likely happen. And, you know, it's just like the progress that's made over time is tremendous. And companies reach profitability scales we never thought possible, revenue numbers we never thought possible, market caps we never thought possible. I mean, you know, if you went back 50 years ago and told somebody there was going to be $1 trillion market cap 50 years ago, people would have laughed at you. Yeah, right, that's impossible. That's what they would have said, right? And then nowadays, you know, even with valuations, you know, that have been obviously hitting the market, we still have multiple stocks that have $1 trillion plus market caps, right? And we're going to have a whole lot more in the future. I mean, in 10 years, I wouldn't be surprised if there's 100 companies that have over $1 trillion market cap. I would not be surprised at all. And so, you know, I think sometimes it's just, you know, zoom out a little bit, right? Because we can get very caught up into all the negative stuff we have going on short term, as we could have it in 2008, 2009 as well, as we could have in the Rona crash, as we could have in, you know, when the tech bubble was going pop in 01, 02. I mean, every single time you could always get caught up in all the negatives, but sometimes it pays to just zoom out and then be like, man, I'm really caught up in all this short-term crap when really the long-term opportunities here in so many different companies, right? So anyways, guys, I appreciate all of you for joining me. Thank you for everybody that subscribed to the channel, 18,400 plus subscribers at this point. I appreciate each and every one of you. Much love as always, and have a great day.